Welcome back to the channel. The recent developments surrounding Onyx represent a notable milestone, particularly in the context of execution and delivery. For an extended period, there had been uncertainty regarding whether the project would follow through on its stated roadmap. Discussions throughout the previous year centered on the launch of a testnet, accompanied by forward guidance indicating a potential mainnet release in 2026. That timeline has now materialized, with the successful deployment of the Goliath mainnet. This outcome reinforces a key point. The project has demonstrated a clear ability to execute on its commitments. This is especially relevant when viewed against the broader market environment. A number of comparable projects, particularly those heavily dependent on centralized teams and operational overhead, have struggled to maintain continuity during periods of market weakness. In several instances, development activity has slowed significantly or ceased altogether, even as tokens associated with those ecosystems continue to trade. The underlying issue in many of these cases has been the inability to sustain operational costs during downturns, leading to a gradual erosion of project viability. In contrast, Onyx presents a different trajectory. The rollout of Goliath, alongside its planned integration into the Onyx application and native XCN Ethereum ERC20 support, indicates continued development momentum. This suggests that the project is not only operational, but actively advancing its infrastructure. From a structural standpoint, this positions Onyx more favorably relative to projects that have stalled under similar market conditions. Despite this progress, market response has remained subdued. The launch of the Goliath mainnet has not translated into a meaningful appreciation in XCN's price. In fact, price action has remained relatively weak, with the asset trading significantly below prior levels and maintaining a market capitalization below $200 million. While there was a modest upward movement around the announcement, it was short-lived and followed by a broader pullback over the subsequent 24-hour period. This divergence between fundamental progress and price performance highlights an important dynamic within the market. Developments such as a mainnet launch are inherently long-term in nature. Their impact is not always immediately reflected in price, particularly in periods where overall sentiment remains constrained. Instead, such milestones function as foundational building blocks, establishing the conditions necessary for future growth, rather than delivering immediate valuation expansion. From a strategic perspective, the introduction of Goliath is a critical step toward enabling broader adoption, increased developer activity, and enhanced network functionality. These elements are typically prerequisites for sustained ecosystem growth. Without such infrastructure in place, achieving meaningful adoption becomes increasingly difficult. In this sense, the timing and execution of the mainnet launch align with the long-term requirements of the project. The broader implication is that value creation in this context follows a sequential process. Infrastructure is developed first, followed by potential ecosystem expansion, which may then translate into increased usage, visibility, and ultimately market interest. The initial phase, represented by the Goliath mainnet launch, has now been completed. The subsequent phases remain contingent on external factors, including developer engagement and overall market conditions. A comparison with prior market behavior further underscores this disconnect between fundamentals and valuation. In 2025, XCN reached a market capitalization of approximately $1 billion. At that time, the project did not yet have the Goliath mainnet in place. From a purely fundamental standpoint, the current state of the project could be considered more advanced than it was during that earlier period. Yet the valuation has declined significantly since then. This illustrates two key observations. First, market pricing does not always accurately reflect underlying fundamentals, particularly in the short term. Second, price declines should not be interpreted as a direct measure of deteriorating project quality in every instance. A reduction in market capitalization does not necessarily imply a proportional decline in fundamental strength. It is also important to contextualize current price action within the broader sector. The recent pullback is not isolated to XCN. Comparable assets, including ZBEC, ZBCN, XDC, and XLM, have exhibited similar patterns. This suggests that the movement is influenced by wider market conditions rather than project-specific weaknesses. From a valuation perspective, the current environment presents a contrast: improved fundamentals alongside a lower market capitalization relative to previous highs. This dynamic may be interpreted as a recalibration phase, where infrastructure development continues despite subdued sentiment. Looking ahead, a key variable remains overall market conditions. If sentiment were to revert to levels observed in early 2025, the presence of the Goliath mainnet could alter the project's positioning relative to its prior cycle. Previously, XCN achieved a market capitalization near $1 billion without this infrastructure. With the mainnet now operational, a return to similar sentiment levels could, in theory, support a comparable or higher valuation. However, such outcomes remain contingent on factors beyond the project's direct control. In its current state, XCN's market